Hello students, this is another video of NPO. In this video, I'm going to take topic fund-based accounting. Okay, it is very important topic which carries 3-mark question in board examination. So let us go ahead. So what is fund? Fund meaning is the amount received or set aside out of surplus. Okay, we know surplus. Surplus is what? It is excess of income over expenditure. So that is called surplus. So if any amount is keeping aside for any kind of specific purpose, so that is called as fund. Okay, and in fund based accounting, what we do exactly, we add the incomes related to fund. Okay, we add incomes related to fund, we add, and all the expenses related to fund we subtract. Okay, fine. So this way, this this is the thing. Next, all the income, suppose that fund we invested somewhere else, so that investment can give you some kind of interest. So that interest is also because of our, so income from that investment is again going to be added in the specific fund account here. Okay, and this fund is to be shown in liability side of balance sheet. Okay, we show our funds in liability side of balance sheet. So what is fund based accounting? It is an accounting system where where receipts and income, okay, where receipts and income and are added, where in receipts and income related to that particular fund are credited, and expenses and all the expenses or payment that are going to be debited means minus, means subtracted. So this is all about fund based accounting system. Now coming to types of fund, there are two type of fund: unrestricted fund and restricted fund. What is unrestricted fund here? Means the objective is not specified, which can be used for any of the purpose, any of the objectives. That is called unrestricted, means use is not restricted by fund. And another is restricted fund, means the purpose is specified, the purpose uses, it can be used for the purpose for which it was received, means purpose of use is specified. So if you see the example, unrestricted fund are capital fund, this is called as general fund or corpus fund, both three terms are same. And restricted fund for, maybe suppose for fund for library, for construction of library, fund for some sport activity, fund for construction of pavilion. So these, if fund for something is given, it means they are restricted or specific fund. Now we talk about restricted fund. Okay, we are not talking here, I am not taking the unrestricted funds, we are taking restricted funds. So restricted fund can create two things: they can create any kind of fixed asset, or they can create any non-fixed asset. Okay, so what are fixed assets? You all know, building is a fixed asset, library is a fixed asset, pavilion is a fixed asset. Okay, so if these fund create any fixed asset, or these fund may create non-fixed assets, suppose sports fund. Okay, if some kind of sports activities are to be taken in the organization, so sports activity is a one time activity, it will be over, it doesn't create any fixed asset. Similarly, for giving prizes, okay, prizes for any match or for any program, if prize fund is created, so prize fund is it is not a fixed asset, it is over. Okay, if you utilize all the amount, so it will be over. So this is non-fixed asset. So restricted fund may create fixed assets, and it does not create any kind of non-fixed asset. Why I am telling you these difference? Because when we will talk about the accounting treatment, the treatment for fixed assets and non-fixed assets, we are going to learn differently. Okay, so this is all about general fund. General fund means capital fund. Okay, so what we are going to do with capital fund? What is the capital fund? Actually, it is excess of assets over liability. Okay, if asset is more than liability, then the difference will be called as capital fund. Okay, so it is similar to capital, which we studied in our class 11th. Under single entry system we also studied it. And if any kind of surplus you get from income and expenditure account, so we are going to add it. And if there is any kind of deficit, so what will do? We deduct the deficit. Deficit means, you can say, loss in profit organization. So this fund does not carry any instruction, carry any restriction over its use. Okay, it can be used anywhere where we want it. Now coming to specific fund, what specific fund we have? The first is prize fund. Okay, I told you it is the fund for distribution of prizes. The second is endowment fund. It is a fund arising out of a bequest or gift for a specific purpose. Okay, suppose an organization, an NPO, received any kind of gift, and that gift can be used only for a specific purpose, that is called as endowment fund. The next is your annuity and endowment fund. It is a donation also, where donor puts some kind of condition, okay, that this income can be used for specific purpose. Now annuity fund, the next is annuity fund. This fund is created from contribution of members with the condition of giving annuity to beneficiary. Okay, so who is beneficiary? Suppose for example, any person, Mr. X, he has given 50,000 to a charitable institution with the condition that after his death, the institution will pay 1,000 per month to his son during his lifetime. So this is after the death of, this will be called as annuity fund, because 50,000 given by Mr. Ram Prasad will be given by institution to his son. Okay, son his beneficiary. But if suppose son dies, so after death of son, means beneficiary, the fund will become the property of organization. Next is loan fund. Loan fund, it is created to grant loans for a specific purpose. Suppose any educational institution set loan fund to grant loans to needy students, okay, to pursue higher studies. So this is called as loan fund. The next is fixed asset fund. It means what? It is the fund which is constituted for making investment in fixed asset. Okay, so these funds are for making investment in fixed assets like building, library, pavilion, etc. So in this video only theory part is taken. In next video I'll take the numerical portion. Thank you.